A contrasting change, moving over to an example with Costco stock chart that shows a stable uptrend line in contrast to the descending trend line of the Bitcoin chart. Not only that, but it is overall more stable on a shallower angle. When this upswing point reverses the market on a bullish uptrend, the volume is relatively low, and that is why the uptrend line starts right around the lowest close here near the absolute low of the entire swing point. Low volume, so there is accordingly little to no penetration of the swing point below the trend line. In sharp contrast, the second upswing point has high volume before, during, and after price reverses sharply, and that is why it is very natural to orient the trend line with the swing point penetrating below it. Having knowledge of candle patterns isn't entirely necessary, but to be more precise, this is a bull hammer reversal candle, and it is appropriate to have the swing point right on the closing price of this candle. These examples show real charting scenarios before, during, and after the analysis, so they won't always be perfect. There is room for improvement, such as in this case. It would be a mistake to remain with the original trend line here with the first two upswing points. When there are further developments in the following weeks, it is appropriate, similar to the Spotify and Bitcoin examples, to adjust the trend line accordingly. These upswing points, creating a wider reversal area, still accommodates the same general price action where there is penetration of the trend line where volume is exceedingly high, and the market remains on a slight incline to generally close above the trend line on the way up. This leads to improved results later on as it more accurately captures the minor flattening prior to another bullish surge and continuation of the developing uptrend. We can change the time frame again, going to another intraday 15-minute chart of the S&P 500 ETF, where there are similar features when plotting an uptrend line. The upswing point takes place over two candles from the last 15 minutes of the 29th to the first 15 minutes of the next day. That means the volume is slightly above normal due to the first portion having slightly higher volume, and that is why there is penetration of these two candles right at the lowest closing price for some moderate penetration of the overall swing point below the uptrend line. It is more of a swing area rather than a sharper swing point due to some flattening of trading. The end result is a highly valid trend line with lasting influence. But nothing lasts forever, and nothing is ever guaranteed, and this breaking of the uptrend line is no exception. Support was present, but in more of a secondary role. Instead of producing an upswing, it produced a minor flat to slightly bullish range with above normal volume prior to the drop to initiate a major downtrend. That was a decisive gap down to open on the 24th with an increasing bearish tone to the developing downtrend. Similar to how horizontal price ranges and levels can have increased validity when there is congruence across multiple time frames, the same is true for trend lines here. Once again, in the 15-minute intraday time frame and daily time frame, there is good transfer, and that is why the trend line is influential in the longer-term daily context as well.